What's up, everyone? Welcome to episode 23, my monthly series where I present to you my top 3 dividend picks of the month that are really designed for passive income, and where I'll also give you a high level update on the overall stock market in the last month, and also for this month, a very special bonus pick of the month as well. So you will get 4 picks for this month. So first of all, I apologize for the bad lighting. As you probably already know, most of you already know, I'm in Panama. I am filming this video during the evening time, so I'm very limited on what light I have, so I apologize for that, but luckily it's the picks of the month, so you won't be seeing my face that much anyway. So if you're new to the channel, welcome. This channel focuses on a long-term buy and hold, income focused investing strategy, and the primary objective of the strategy is to generate relatively safe, consistent passive income forever from your investment. So we achieve that goal by investing primarily in funds that hold blue chip stocks and that use income enhancing strategies. So this strategy enabled my wife and I to become financially independent in our mid-30s back in December 2019. So this channel is really to show you how we invest for maximum passive income so you too can achieve financial independence like us as quickly as possible. Also, don't forget I'm Canadian, so most of the stocks and funds that I talk about on this channel are listed on the Canadian stock market, but we invest on the US stock market as well when it comes to our retirement account. So in this case, 2 out of the 4 stock picks will be US listed picks. So stay with me if you're American or if you invest on the American stock market, because the first pick and the last one for this special month will be for you. And don't forget, as a Canadian, if you like my US stock picks, try to put them in an RRSP account so you don't have that 15% withholding tax on the income. Also, don't forget to check out my previous monthly stock picks of the month videos as well. If you're new to the channel or missed them, many of them are still very good picks. This month, I have a specific YouTube playlist for all my stock picks of the month videos. So make sure to check out also my other playlists as well. I have other ones, including where I group my portfolio unveil videos. Those are my most popular and most watched videos, where I unveil my portfolio from A to Z, and other playlists as well. So talking about the stock market, let's get into the stock market update for January. So finally some volatility right near the end of the month. Like the popular saying goes, stocks tend to take an escalator when they go up, but they take an elevator when they go down. So if you're a newer investor, it's possible that this was really the first time you kind of see this big drop. First of all, let me assure you that this is completely normal, okay? You can't expect equity prices or stock prices to go up forever, right? That actually scares me more than dips, to be honest with you, because it doesn't make sense for them just to keep going up and up and up forever. So there's a reason why they call it a correction, right, guys? So don't worry, it's normal, it's expected. I wouldn't even call what happened a correction. It wasn't that big anyways, peanuts really. And I'm filming this on January 31st on Monday, and already it's reverse course and it did a big recovery, so it really wasn't so bad. The dip was really not hard to understand either, right? It was expected. Interest rates are going to rise soon to fight inflation. Monetary spending from the central bank will gradually slow down and phase out. So what sector was the hardest hit with this dip? Well, technology. And it makes perfect sense if you think about it. Tech stocks or growth-oriented stocks tend to shine when interest rates are really low, because investors cannot make much money from bonds or fixed income, as these investments are mostly based on what interest rates are, right? So as interest rates rise, or the Fed announces their intention to eventually increase interest rates, investors start getting more and more interested in fixed income because they simply are getting more attractive. So what stocks are doing great, however? Financials, right? Because interest rate hikes are good for financials, because we all know how banks make all their money, right? By lending money. So it's just economic cycles, everyone. There's really nothing to worry about, and it's completely normal. And most importantly, don't forget what kind of investors we are, right? We're buy and hold income investors who invest regularly over time and never sell anything. So anytime volatility does hit, it's a good thing for us, not a bad thing. I'm actually a bit excited, to be honest, because nothing is really more boring for me than a bull market that just keeps going up and up and up, because there's less great deals out there. I'm an opportunistic buy and hold income investor who tries to invest regularly every month. So if there's finally some good deals, although already it's starting to recover. Today there was a big recovery, which, to be honest, is a disappointment. I would have liked more volatility. So take a breath. If your account value has gone down a bit the last few weeks, mine has also. Did you miss any dividends? No. Did you sell anything? Hopefully no. So what's the problem? There's nothing at all, right? It's growth investors who really have little to no yield, who should be worried, not us, because with growth investing, they make all the returns on stock prices and what the stock market does. We make our returns as income investors with time itself, with the passive income. So we're much less dependent what stock market does, what stock prices do. Sudden dips like this really make me appreciate being a passive income investor. So 2022, brace yourselves, guys, because it could be a very different year from 2021. So stay calm, stay focused and disciplined, and most importantly, stay passive. So my 4 criteria for my stock picks, as usual, I own it myself or plan on owning it in the near future. The fund or stock must provide a consistent source of passive income, so a dividend or a distribution. Number 3, the dividend or distribution must be relatively safe and sustainable. In other words, the fund must be designed to provide consistent passive income, even if it fluctuates, right? So covered calls, of course, helps this to make a reality, which is why the covered call strategy is really the bread and butter of my portfolio, of my strategy. And number 4, the fund needs to have good value right now. So without further ado, let's check out my stock picks of February 2022. All right, guys, pick number 1 is, of course, QYLD. Shouldn't be a surprise. This is the NASDAQ 100 covered call ETF from Global X. The dividend payout is monthly. Annual dividend, keep in mind, this is an estimate because it changes monthly. It's $2.61 a share. So QYLD, it's an ETF that tracks the NASDAQ 100 index. So it's the biggest 100 companies on the NASDAQ, excluding financials. So very, very tech heavy. Obviously, tech is the undervalued flavor of the month, I would say. So this fund writes at the money calls on the NASDAQ 100 index. That's how it generates that high monthly income of always about 10 to 12% yield annually. So the 1-year high stock price, 23.58, which would give you 11.07% yield. But as of January 31st, the stock price is very discounted at $20.77, which would give you a yield of about 12.5%, which is really, really great. So here are the top holdings, by the way. So as you could see, the top holdings of the NASDAQ, and this is an index, right? It means that the bigger the company is within the index, the more percentage it's going to have in the fund. So obviously Apple, since it's the biggest company in the world out there, it's the number 1 holding. Microsoft, Amazon, Facebook, Tesla, Google, Nvidia, Adobe, and PepsiCo. So those are the top 10 holdings that make up about something like 50% of the fund, or 40% or something like that. And I just put the last year's or the last 13 months of distribution. So you could see that, they do vary every month. The last distribution of 2021 was very, very big at 49 cents, almost 50 cents. But as you could see, they're all always around 20, 21, 22, sometimes a little bit lower. This depends on the call premiums, right? The premiums that the fund manager sells. So my points and reasoning shouldn't be a surprise. The tech sector is what took really a big hit in mid to late January, although it kind of recovered a little bit. It's still discounted in my opinion. Like I mentioned at the beginning, interest rates are rising, so there's less demand for growth stocks because they become less attractive. This is simply part of the economic cycle. As mentioned, QYLD follows that NASDAQ 100, which is very tech heavy, but it doesn't only have tech, and it writes at the money calls on the index. So you got high yield with that. QYLD, by the way, is the biggest and most popular covered call ETF on the US stock market with over $6 billion in assets. It's been around since 2014, never missed a monthly dividend. This investment essentially gives you give up all the growth potential of the being invested in the NASDAQ for very high monthly income. It's really perfect for your RRSP if you're Canadian, and it's personally, between my wife and I's RRSP account, it's our biggest holding. So you could just drip and forget about it. And I also have, if you want to check out this video on my channel, I do have a video that covers QYLD in detail. Pick number 2 shouldn't be a surprise either. It's once again, just like last month, it was a pick of the month. It has to be a pick as well. This month, it's the Purpose Bitcoin and Ether Yield ETFs, BTCY, the Bitcoin one, ETHY for the Ether one. So it's managed by Purpose Investments. Dividend payout is monthly. The annual dividend, very hard to track because they're going to be different every month and only 2 of them are out. So these are estimates, okay? I repeat, these are estimates. So $1.08 for the Bitcoin, $1.44 for the Ether one. So these are really brand new ETFs that really gives us income investors the first opportunity to invest in crypto because the purpose is yield. So they write covered calls basically on their own Bitcoin and Ether ETFs. So the purpose Bitcoin ETF, which only holds Bitcoin, is BTCC. The one that holds Ether is ETHH. So BTCY and ETHY, they're funds that hold these Bitcoin and Ether, but they write covered calls. That's the difference. So it's the first of its kind and has very high yield potential because crypto is very volatile and volatility is good for covered call premiums. Management fee is 1.1. In my opinion, it's worth every penny simply because it's very difficult to manage the covered calls on these, as you will see later on when I do an interview with Purpose Investments. Very excited, that's coming up soon. So there's 3 listings for each one, by the way. BTCY, ETHY, that's the currency hedged versions. That's the one I invested in. You have the .B ones, which are the non-currency hedged versions. So all it means if you have currency hedged is that the difference or fluctuations between the Canadian and US dollar will not impact the fund. That's basically all it is, but it's not much of a difference, to be honest. And they even have US versions, so versions that are still listed on the Canadian stock market but are in US currency if ever you're interested in that, if you want the US dollars for some reason. Key points and reasoning. Crypto pretty much follows tech stocks, kind of, so they both take a beating, but a great buying opportunity. As simple as that. It's really a no-brainer, guys. Finally, it's a way to get income with crypto. I will never invest in anything, including crypto, if it's not designed to give me income. These ETFs change all that. We finally have a way to invest in crypto to get income. Obviously, another great point is the crazy high yield potential, right? Because of the volatility, high monthly distributions, their brochures say double-digit yields, which means we could expect at least 10% yield for both of these ETFs at the minimum. Bitcoin and Ether, by the way, if you didn't know, they're the 2 biggest and most well-known cryptocurrencies. Like I showed in the earlier slide, you have the choice of a hedged version, a non-hedged version, that's the .B, or even a US currency version. So like I mentioned, hedge really mitigates the Canadian dollar versus US dollar fluctuations. Keep in mind the calls are not at the money like QYLD, they're out of the money. So you will have capital appreciation if the Bitcoin price or Ether prices rise. And like I alluded to earlier, stay tuned for an upcoming Q&A video with Purpose Investments to discuss these ETFs in detail. Very excited about it. The video is in post-production. I have a 30-minute Q&A and all we talk about is these 2 ETFs. You don't want to miss it. Pick number 3 is TXF, also technology, right? So it's the CI Tech Giants Covered Call ETF from CI Global Asset Management. Keep in mind, there's actually 4 great covered call tech ETFs in Canada. TXF is the one I'm featuring, but you also have HTA from Harvest, ZWT from BMO, and TLF from Brompton. They all do the same thing, but TXF has the highest yield. That's why it's my preference. So the dividend payout is quarterly, however, not monthly. The other 3 are monthly, so there's a little disadvantage with TXF. The annual dividend is $1.78. This is based on the last 4 distributions. Keep in mind that all the CI ETFs, their distributions are quarterly and they vary every single quarter. So you can't think of them as them going up or down. I think of them simply as they vary. So TXF, as long as with HTA, ZWT, TXF, they're ETFs that invest in tech stocks and they write covered calls on some of the portfolio to enhance the yield. So the 1-year high price, $24.79, which would give you a yield of 7.18, but right now it's at 20.75, a nice discount. So you would get an 8.58% yield, which is really, really good for tech. Very hard to get yield off tech because there's not much dividends there. This is where the covered calls really come in and shine to help you to get that yield. Thank you, as usual, covered calls. Key points and reasoning, kind of the same for QYLD. Tech sector took a big hit. well, medium hit, mid to late January. It's still discounted. It's because of the interest rates rising, or the news that interest rates are going to rise. There's less demand for growth stocks. It's simply part of the economic cycles. This is the best way to own, in my opinion, tech stocks all in one ETF. So these ETFs have all the best technology companies. You don't have to own them yourself, individually yourself, or try to figure out which ones to buy. Why bother? Just get an ETF. You'll have all the best technology companies. And thanks to the covered calls and enhanced yield. So like I said earlier, there's a bunch of covered call ETFs in Canada that focus on tech. Besides TXF, which has the highest yield, there's also ZWT from BMO, HTA from Harvest, and TLF, which do offer lower distributions but monthly distributions. So there's no right or wrong choice here, guys. It's really up to you which one you like best, HTA, TXF, etc. The best advice I could give you is look them up, look at the holdings, look at the dividend yield, and make the decision for yourself. There's really no right or wrong. Now it's time for the bonus pick. It's ORC. So ORC, it's Orchid Island Capital. This is a US listed fund. I repeat, it's listed on the US stock market. The dividend payout is monthly. The annual dividend, it was recently reduced from 78 cents to 66 cents a share. What does this company do? This is actually a single stock. Very rare I invest in single stocks, but this is a single, like a company that invests in something else. So Orchid Island Capital invests in residential mortgage-backed securities, MBS, also known as mortgage REITs, and they do so on a leveraged basis. So they borrow money to enhance the yield and invest in these mortgage-backed securities. They pay out a monthly dividend to investors. That's really the mission of this company, but the monthly dividend can vary. As we just saw, there's a recent reduction. 1 year high price, look at this, 621. You would get a 12.56% yield with the 78-cent distribution, annual distribution. But right now, the stock took a beating. That's because of interest rates going up. It costs more money for them to borrow money, basically. It costs more. So the current share price, it already started recovering, but it's very low, near its all-time low at $4.03. Look at this yield, 16.37%, and that's even with the reduction. Very, very high yield. Big opportunity here. ORC is at the all-time lows because they're getting squeezed with interest rate hikes. They borrow money, right, to invest in residential MBS. January, they reduced their dividend from 78 cents to 66 cents, causing a big dip in the share price. Keep in mind, by the way, it was also reduced at one point in 2020 to 66 cents, but then it recovered shortly. So I'm telling you this that because the 66 cent dividend might increase in the future. There's actually a strong possibility of that. And fear and a big dip equals a buying opportunity, as I've seen many times on these REITs. Anything to do with REITs. As soon as they cut the dividend, people dump it for some reason, bang, that's when you could get in. It's a perfect time. So another cool fact is that under a press release in January 13th, they said that their book value, or their NAV, is $4.34. So it's actually, this fund or stock is actually trading at a discount right now. So it's always a great deal when you pick up something at a discount. So this stock pick is really not for those who have a weak stomach. It could be a great long-term play with high income. Put it in your RSP if you're Canadian. I personally have $15,000 invested in this, and I'm down 20% on it, but I have a 13.27% yield, so I'm okay with that. Don't make this a big part of your portfolio or go all in. Something like a few percent, 5%, not more than that. This is just really a cool opportunity to buy and hold long term, guys. It could have a more fluctuation. It could reduce the dividend even further. But what I like about it is that it's designed to give you monthly income no matter what. So take a small position. And once again, if you don't tolerate a lot of volatility or higher risk, I would stay away from this one. If you have the stomach for it, if you have the guts, take a small position. Let's do it together and we'll see what happens. As usual, thanks for watching, guys. Please show your appreciation. Please support me by hitting the like button. I would really appreciate it. It helps the channel grow, so it's a win-win. Also, if you don't want to miss my next month's stock picks of the month and my great content coming up for you guys, make sure you're subscribed. Hit that little bell button next to it so you're alerted when a new video comes up. I'm very excited on bringing you more and more great content, and I have a lot more fun interviews fund manager interviews rather coming up. So you really don't want to miss it. I love talking to the professionals about all the funds that I'm investing in to really show you guys how they work and basically how they manage these funds. Very, very good, interesting stuff coming up. So stay tuned and make sure you're subscribed. Also visit our website, passiveincomeinvesting.ca. That's where you could purchase my digital product, the ultimate DIY investing package. It's on version 3 right now. It comes with lifetime updates, so you only ever have to buy it once, which is a great feature. And it's really a reference tool, a companion tool to help you build your own portfolio, no matter what your investing goals are. There's sample portfolios in there, and it's good for Canadians and Americans as well. You have 7 sample portfolios on the Canadian stock market, 7 on the US stock market. And I'm always going to keep upgrading and updating this product forever. So it comes with lifetime updates. You only got to buy it once. Also, on my homepage, right there on my website on the homepage, I do offer a one-on-one consultation service with me personally. So it's a 1-hour Zoom call with me if ever you want more personalized help. I love doing them, but I got to limit myself to 4 a week, because I need the time really to keep making content, right, for my channel. So unfortunately, I always sell out in one day when I open the new calendar for the month. So my February appointments have already been sold out. Sorry about that. Stay patient though, and you could always send me an email if you want me to put you on the cancellation list in case I get any cancellations, but it's very, very rare, just a warning. So stay tuned for the March appointments coming up, which will be opened. Usually I do it in the 3rd week of February. So of the previous month. So stay tuned and stay patient. You will get an appointment. I will keep offering the appointments, and I'll try my best to figure out ways to alleviate the load of appointments. So stay tuned. I might have some ideas coming up. Also follow us on social media. We have a Facebook group called Passive Income Investing. Great group, almost 10,000 members. We talk a lot about the funds and stocks that I talk about on this channel. Very, very cool group. We're all trying to help each other out, answering questions. If you want something more personalized, to see some more of our personal life, follow us on Instagram as well if you use that social media platform. So as usual, continue to stay safe, stay healthy. More importantly, stay passive. See you next time.